Congratulations, you won.
First off, I want to start by saying that while I am very bullish long-term on Bitcoin and the crypto space, there are certain outliers which could derail Bitcoin's seemingly inexorable ascent to wherever it's going. Global domination, perhaps. These include, but are not limited to, a worldwide governmental ban on crypto enforceable at the banking level, a serious code exploit such as an infinite inflation bug or otherwise, a governmental commandeering of mining pools to initiate a 51% spawn camping attack, attacking the chain over and over again until it becomes non-viable, the NSA developing a quantum computer out of the blue that can steal a bunch of coins before we can do anything about it, a natural disaster the likes of which will see humanity resort to ammunition and potatoes as the true global reserve currency, or simply Bitcoin loses its popularity. As you might be able to tell, these events and more are theoretically possible, but if this is the level we need to take our theories to determine what can stop Bitcoin at this point, then I'd say that's pretty good odds. I'd wager you struggle to find better odds in the investment world. It's quite the privilege to hold on to a Bitcoin.
Can I hold on? Can I hold on to you?
On shorter time frames, currently Bitcoin is looking really good, barring a stock market implosion. Super weird on and off relationship where Bitcoin isn't likely to do great if traditional markets don't perform well, but inversely, Bitcoin's fundamentals only grow stronger if traditional markets don't perform well. While this correlation exists in an on and off fashion, it's important to note that traditional markets are still being outperformed. People's understanding of this asset isn't quite there yet. The quote, gradually and then suddenly, often attributed to Mark Twain, fits here, I think. So let's address that lack of understanding. Here are 5 things everyone should know about this Bitcoin bull market. Number 1, John McAfee's $1 million per Bitcoin by 2020 prediction still has like 2.5 months. Hey, I'm just saying. Really, number 1, Bitcoin core developments. 2020 was a year full of crypto developments, and not all of them were just limited to Ethereum. The next Bitcoin upgrade is pretty close to launching through a soft fork upgrade scheduled for this or possibly next year. And with it comes, well, that's kind of hard to talk about. It's actually several different technologies proposed over the years, bundled together, mainly Mast, Schnorr, and Taproot, each one being unique technically and conceptually, so it's a little hard to figure out what they are doing. Some people say it's a privacy upgrade, others a scaling upgrade, others that smart contracts, a bit like Ethereum houses, could now be developed on Bitcoin. The people saying those things aren't inherently wrong, but this upgrade is just not inherently designed for those things. Think of it more like a big piece of the puzzle for one day those things becoming a reality. But this sounds like a major change to Bitcoin, especially the smart contract part. Is that what Satoshi even originally wanted? Actually, yes. It's worth noting too that Bitcoin's scripting language previously supported more complex types of smart contracts. However, the digital currency's still pseudonymous creator Satoshi Nakamoto had to rip many of them out back in 2010 when he or she realized that there were bugs that malicious actors could use to clog the network with spam. It's taken a while to build that functionality back up. Makes you wonder what Bitcoin would look like today if Satoshi was still around. But does this mean Bitcoin will ever be able to challenge other smart contract platforms like Ethereum? Jameson Lopp, a famous and likely biased, let's be honest, Bitcoin engineer, attempted to answer this very question. Lopp went on to mention Mast, Taproot, and Simplicity are examples of how more expressive smart contracts may work on Bitcoin in the future. However, he added that it's up in the air in terms of when this sort of stuff will be as easy for developers to use as something like Ethereum's Solidity or Viper languages. I'm guessing the answer will end up being, to a degree, yes, but don't expect quite the same functionality. The important takeaway is Bitcoin is always improving as a technology, albeit slowly.
Let's buckle down and work.
Number 2, growing company involvement. In August of this year, MicroStrategy announced that they had invested $250 million into Bitcoin. Their CEO succinctly summarized the decision as follows. Our investment in Bitcoin is part of our new capital allocation strategy, which seeks to maximize long-term value for our shareholders. This investment reflects our belief that Bitcoin, as the world's most widely adopted cryptocurrency, is a dependable store of value and an attractive investment asset with more long-term appreciation potential than holding cash. Really? Shortly after, Twitter followed suit, allocating $50 million. And more companies are strongly expected to follow suit. In fact, while writing this video, news broke that a London Stock Exchange listed company are announcing they are making a significant purchase of Bitcoin. How much exactly, they've not declared.
$1 million!
Hopefully it's more than 1 million.
Sorry. $100 billion!
And just today, PayPal announced they're going to allow Bitcoin buying and payments to over 300 million users. My prediction is the next inevitable step is more banks offering Bitcoin custody. Main reason this is occurring is currency debasement, aka high inflation. You can only take so much of it before it becomes very concerning. In the UK, the total money supply, known as M2, within just the last 4 years has increased by nearly 25%. And this is just circulating money. More inflation has actually occurred in other harder to measure ways in addition to this. Much worse in the US. From January 2016 to August of 2020, the circulating money supply has increased by nearly 50%. And it's going to get higher. But we are not here to debate the ethics of this or to even complain. However cathartic that may be, it is only in our interests to adapt to it. So the holding of undebasable assets has never been more important. And what just so happens to conveniently beating the stock market, the gold market, and other assets? That's right, Bitcoin Cash.
Who did you buy this from? Who did you buy this from?
I can't believe I paid $300 for something so stupid. Why? Why didn't I do more research? I'm so stupid. How did my parents birth somebody this stupid?
Number 3, fundamentals. So many potential indicators to show. Rising number of active addresses, distribution from whales to minnows occurring, stablecoin supply rocketing, amount of transactions. I could go on and on. Potentially the most immediately impactful to price that's occurring is what's referred to as a sell-side liquidity crisis. This is where there is not enough liquidity for whales to buy Bitcoin without pushing the price up. Exchanges are losing their Bitcoin balances at a rate unseen in history. The takeaway from this is, people buying Bitcoin this year are not looking to short-term speculating on it. In fact, this liquidity crisis may currently be a bigger deal than we know. OKX, a massive Ethernet crypto exchange, went down around 5 days ago at this point and has still not opened up for withdrawals. Here's the kicker though. They custody over 200,000 Bitcoin. That's $2.4 billion worth of Bitcoin that has essentially been locked from supply. That is so much money. It has without a doubt had a positive impact on the price of Bitcoin and will undoubtedly have a negative impact when they become unlocked. How much is impossible to predict. I'm not going to over-exaggerate this, even though I so easily could. Number 4, CBDCs. It's widely expected that within the next 5 to 10 years, much of the world will adopt at least partly a central bank digital currency, or digital fiat currency. The present concept being directly inspired by Bitcoin, but a different beast altogether.
Hapchu, 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 hapchu.
Fuck you. You're fucking sick.
The benefits for us would be supposedly easier access to bank accounts, combating crime, cheaper rates maybe when going on holiday and changing currencies, theoretically could be used to more fairly distribute stimulus, and increase technological efficiency, whereas banks currently take days to process transfers and payments. This would now clear in real time. Hi, I would like to send $10,000 from here in LA to London as soon as humanly possible, please. As soon as humanly possible? Read my lips. ASASP as possible. Well, honestly, put it in a suitcase and get on the next direct flight. It's quicker than using our system. But realistically, most of us won't even notice that. The negatives are far worse. There is a quote which is, power corrupts, and absolute power corrupts absolutely. CBDCs are practically absolute power. Everything we do would be easily surveyed in real time, completely censorable. And so, in my opinion, this would be a giant leap forward towards a dark future. I suppose there could be hoops we'd make the government take so they don't have too much control somehow, but it's best to just avoid it altogether. Currently in China, for example, if you are deemed to be untrustworthy, you are denied access to plane tickets, train tickets, opening and operating businesses, and more. Currently, at least we still have freedom with cash, but if that's abolished in favor of a CBDC, we are completely at the mercy of the government. I genuinely feel that if Americans feel strongly enough that they need to have lawful access to guns in case their own government goes rogue on them, they absolutely need to feel just as strongly about maintaining their rights to privacy and financial freedom. But failing that, this is where Bitcoin comes in. Are we starting to grasp how important Bitcoin is now? I hope so. Plus, we will have the added benefit of most of the world's population being more open to the idea of using cryptocurrency after being forced to use it already. Hence, CBDCs being a very scary prospect, but also good for Bitcoin.
This, as they say, is definitely good for Bitcoin.
Number 5, ignore short-term fluctuations. I think if there's one thing I think our community could do a little better with, it's definitely this one. I'll talk positively about Bitcoin, release a video, and Bitcoin might do -2, -3% on the day, and the top-rated comment is, well, this video aged like milk. If Bitcoin can do near -50% in just over 24 hours and rebound within a matter of weeks entirely, you should definitely view percentile moves as just noise. Keep the bigger picture in mind. Dollar cost average, or better yet, earn in Bitcoin if you can. Turn off price alerts. It's an accumulation game. This one time, Bitcoin crashed.
This one time, Bitcoin went from 6 cents all the way to 36 cents, and then it crashed down to 21 cents.
As a final bonus point, because it doesn't directly affect Bitcoin, Phase 0 of ETH 2.0 sounds depressing, Phase 0, but that's what it's called. Step 1 of a 3-step process to fully launch sharding is expected to launch at any time before the end of the year, and with it, the ability to stake your Ethereum will be introduced, although they won't be withdrawable for a while, which may be nice for the price, but take that for what you will. And that's been it for me. Follow me on Twitter for more. Leave a like if you enjoyed. Share it with someone you think needs to know this stuff. And I'll see you on the next one.